Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the levels to watch out for on the Nifty, all the stocks that will be making headlines in today's session, and we'll also be getting all your stock-related queries answered by our technical expert on the show. But before we do that, let's take a look at the top headlines at this hour. Wall Street ends the choppy session higher after stronger than expected retail sales data suggests that the Fed will need to keep raising rates for some more time. Meanwhile, in Europe, FTSE breaches the 8,000 level for the first time after UK inflation dips for the third straight month. Asian markets kickstart the day on firm footing after Japan reports a record trade deficit of 3.5 trillion yen. SGX Nifty hints at a positive start for the Indian markets. Also on the show today, Nestle reports fourth quarter earnings. What are the expectations? And reports suggest that IndiGo promoters may sell 4% stake via a block deal. And lots of other stocks in focus in today's show. Well, as I was talking about Nestle, this will be the last of the index companies to be reporting its earnings today. What are the expectations and what should we be looking out for when it comes to Nestle Q4? Well, I have with me my colleague Mangalam Maloo joining in to break down the numbers for us in the sense of what to expect from Nestle in the fourth quarter earnings. Mangalam, is Nestle staring at margin pressure in the fourth quarter?
Well, along with all the other FMCG companies, Nestle is also staring at some margin pressure. But, you know, as against some other FMCG companies, what Nestle will do better is revenue growth. Why is that? Because if you notice, HUL, Marico, Dabur and Bata, all of them said that they are facing pressure at the lower end of the demand spectrum, and a large part of that is coming in from rural itself. Nestle is relatively immune from that. Why is it? Because nearly 2/3 or 3/4 of Nestle's revenue comes in from urban India, where there isn't a slowdown. Right. Secondly, in rural itself, they're increasing their distribution. So, you know, if people aren't buying from the same store, the fact that they're increasing their presence would mean that the rural revenue for them will also grow. So all of this together would mean a 17% revenue growth. They've taken price hikes as well. So 7 to 8% volume growth, double-digit price hike would mean that, you know, the revenues will grow by about 17%. You're looking at a number about $500 million, so to say, close to around 4,400 odd crores. Margins, EBITDA grows just 10%. Margins come off a tad from 23% to around 21%. Why is that? Because, you know, one of the key ingredients of Nestle, which is dairy, is seeing an incredible inflation, an atrocious inflation, so to say, over the last few months. And we've heard this from not only, you know, dairy players like Amul and Mother Dairy who've gone ahead and increased milk prices on a regular basis. But even Britannia, which has a small dairy business, has said that milk, and I'm quoting Varun Berry right now by saying that milk prices have gone out of whack. Right. That's the word. So that will impact their gross margins and EBITDA margins, even though, you know, some of the pressures of packaging prices, palm oil prices will benefit them because that's been easing. Net, there would be an impact of close to around 120, 130 basis points on the margins.
Right. Mangalam, what about its snacks segment and Maggi? How are these two segments expected to do, and what would you be watching out for from the management commentary? So
Maggi is likely to do better. And why do I say that? Because, you know, irrespective of the consumer sentiment right now, the two resilient categories have been food and beverage as well as snacking. So in that, Maggi is the king. I mean, everyone knows, you know, when they're hungry, just open a pack of Maggi, etc. Biscuits, we've seen Britannia's numbers, we've seen ITC's food numbers, all of them have done extremely well. So you draw from that on Nestle, and you know that Maggi is doing extremely well. It's about 1/4 of their portfolio. So that is, you know, one part of their business which is likely to do well. Impulse category, chocolate is going through the roof. So everyone will be eating a fair amount of chocolate. We had the festive season, etc. as well. So that is another part of their portfolio which will do well. But from the management commentary, I'll just eye a couple of things. One, you know, is there pressure in the entry level, the 5 rupee, 10 rupee packs, etc.? And is there any improvement thereafter? Because while everyone's been talking about rural market and lower, you know, inflation-related demand problems, they've also alluded to the fact that come December, after some stability in inflation, you know, December, January has been good. So is Nestle echoing that sentiment as well? Is something we'll be watching out for? And secondly, now that milk prices have somewhat stabilized, will we see further margin expansion? So those are a couple of factors I'll be watching out for.
Right, Mangalam, since you mentioned Maggi, I'm tempted to grab that for breakfast today. Hopefully, I'll see you in the canteen. Thanks definitely. A lot for taking us through giving us a lowdown on what to expect from Nestle.
All right, thank you.
Thank you. Well, on that note, let's introduce our guest on the show today. Ruchit Jain of 5paisa.com joins in now. Good morning, Ruchit. Good to have you on the show. Well, after days of struggle, the Nifty has managed to conquer that 18,000 mark. And if you look at the SGX Nifty giving us positive signals for the day. So what are the next levels that you would be watching out for on the index for today?
Yeah, hi, very good morning, Nandita. Well, Nandita, I think the market's trend is likely to change positive from here on. Primarily, if you look at last couple of weeks, we have seen a lot of volatility around that budget week, where we witnessed some correction based on the news flows on the Adani group, where we then saw selling across the markets. But around that and around all that volatile phase, I think markets have formed a good support base around that 17,400, 17,300 range. And the prime reason for our markets underperforming the global peers, because global markets have been doing good off late. You see the Nasdaq index or Dow Jones, they have been trading above their crucial short to medium term supports. But the only factor that was worrying at our markets was the FIs selling. They were selling in the cash segment as well as in the index futures in the February series. They started with short positions and continued the short positions for most part of the series. Now, just a couple of days ago, their long short ratio was around 16-17%, means about 83% of their positions were on the short side a couple of days ago. So I think they were quite short heavy even during last year in June 2022, when they had this kind of shorting formation. Our markets witnessed some corrective phase, but from that 13-14%, whenever they witness such short heavy positions, they then look to cover their short positions, which brings positivity in the market. So similar structure has been seen this time also, although levels are different. Last time we were around that 15,800 mark. This time we are around 17,800, 18,000 range. But the long short ratio has started improving. We witnessed some short covering move from FIIs day before yesterday, due to which that 16-17% long short ratio has improved to about 27%. So I think as they cover on their short positions, as we approach the expiry, they are likely to cover some more shorts, which would bring some positive in the markets. And yesterday, even technically, we witnessed a breakout above that 17,950, 18,000, which was a very crucial resistance technically as well. So I think next higher levels to watch out would be 18,200 to 18,250, which was the previous resistance zone. So from here on, and even if you look at the index components, this time last 2-3 trading sessions, the heavyweights have been witnessing good buying interest. You look at ITC, which is moving higher. IT space has been doing good. Reliance Industries has shown a bounce back from its crucial support zone. And of course, if no banking supports, and if we see a breakout above 41,800 on the bank Nifty itself, then some banking and financials too would come in momentum. So I think if the heavyweights perform, that is good for the Nifty. We can expect levels around 18,200 to 18,250 at least.
Right, so those are the levels to watch out for on the Nifty. 18,250 levels is what Ruchit is talking about. Ruchit, since I was just talking to Mangalam about Nestle, staying with the FMCG basket, I want to get in your views on HUL. Rishi Ranjan has also sent in a query and he wants to know your views on the long term. As we know, yesterday most of these FMCG counters were under pressure. Do you expect these companies to remain under pressure today, or would you expect a bounce back?
I think more of a time-wise correction could be expected in FMCG names. Of late, some relative underperformance has been seen in FMCG stocks. Except ITC, none other names have seen any significant up move as far as FMCG names goes. So I think if I come on to HUL particularly, since last couple of months, the stock has been trading within this 2450 to 2700 range. And as of now, there are no signs of breakout on the either side. So it's not that the stock is negative, but I think in terms of returns in markets, it may show some relative underperformance in some time-wise corrective phase to continue. So there's a good support around that 2450 mark on the lower side. If the stock comes around that lower end of the support range, then I think that could be a good opportunity to take some contra trades over there, since the risk would be, the stop losses would be small from those levels.
Right, Ruchit, I also want to get in your thoughts on IndiGo. Reports are suggesting that promoters are likely to sell 4% stake via block deal today. If you look at the stock, it has been under a fair bit of pressure this entire week. What are the kind of levels you would be watching out for on this one today?
So we have already seen a good price up move off late, and some profit booking has been seen in last 2 or 3 trading sessions. So I think on the lower side, 1900 to 1870 is the next support range for the stock. So for time being, I think the stock would continue to remain under pressure. Although no fresh short formations have been seen, but at least unwinding of positions could be seen, which could lead to some pressure in the stock towards the 1900 or 1870 mark.
Ruchit, I also want to get in your thoughts on Adani Total Gas and Adani Transmission. In fact, this morning there is a bit of news that MSCI will postpone the implementation of updates to weightings of these two counters. Now, these two have been locked in lower circuit on a regular basis now. Do you expect some kind of reprieve to come in today's session?
Nandita, frankly, last 2 or 3 weeks since there's news flows has come on the Adani front, it's very difficult to take any technical analysis on these stocks because more than any kind of analysis, the stock price movements are based on psychology. The investors and traders psychology, which is at least not much positive for now. So except some pullback moves in Adani enterprise from the lower levels or Adani ports, that too not majorly, but some pullback move has been seen. But some other stocks have continuously been moving circuit to circuit. So better to stay away from these names for now until the sentiment improves or things change drastically. No, I don't advise to do any kind of bottom fishing in these names.
Right, avoid bottom fishing on the Adani group of stocks at the current juncture. You also mentioned Reliance. It was one of the top contributors when it comes to index moves. This morning, there's a news flow that government has reduced windfall tax on crude to 4,350 rupees from 5,050 rupees per ton. More upside on Reliance in today's session, Ruchit?
Yes, I think it could. Yes, I think that could see some. We could see some positive impact of that because if you look at stock price movement, the stock has witnessed correction because of these news flows when the windfall tax was imposed. But of late, last 3 or 4 trading sessions from the previous support zone of 2,300. If you look at some historical data, even during the month of September 2022, we witnessed a good support around the 2,300 mark, from where the stock rallied towards 2,700, 2,750 range. So similarly, this time too, around same levels, around 2,300, the stock has taken support. Last couple of trading sessions, good volumes have been seen, which clearly indicates a buying interest. So already price-wise correction has been done from 27 to 2,300 we have seen. So I think the downside seems to be very limited from here on. And the kind of buying interest that we are seeing, if such positive news flows come during such time where the prices are already corrected, then I think this could lead to some further up move in the stock. So 2570, 2580 would be the initial levels to expect in the Reliance Industries in the near term.
Right, expect more upside on Reliance Industries in the near term. I'm getting a query from Harry Singh on Tata Motors. He wants to know the price targets on the stock for the short term, that is 1 month, and the long term. Now, the stock has been gaining. Over the last 1 month, it has gained somewhere around 7% or thereabouts. So what are the kind of targets would you be looking at on this counter now?
I frankly believe the price-wise corrective phase is over for the stock. We have seen a good underperformance about 7 to 8 months in this stock. When we witness price correction, and this recent up move from lower levels is clearly an impulsive up move, where the price up moves have been supported by good volumes. The immediate resistances have been crossed. So I think in the short term, we could see some upside towards 470, 480 range. So if it is looking from a near-term perspective, then 470, 480 could be expected. And if he's a long-term investor, if you look at some of the weekly or the monthly charts, then on the monthly charts, maybe next 1 year or 1.5 years, you can expect levels around 570, 600. That's also possible. So I think the downside seems to be limited from here on. Any corrections if comes, then that should be seen as a good buying opportunity from mid to long-term perspective.
Right, the price correction is over and it looks good on the charts now. The next query is coming in from Neeraj Garg, and he wants to know your thoughts on PI Industries. Now, the stock saw a healthy up move in yesterday's session, even though it came off its day's high. Would you expect this level, this stock to head towards the 52-week high or cross that 3,200 barrier anytime soon?
So some good amount of volatility has been seen yesterday, but I think that we need to see whether the prices see a follow-up move or not, because it happens many times, and on based of news we see such kind of positivity for 1 or 2 trading sessions, then again we see some cool off. So I think if the price sustains about that 3,200, 3,230, which is the resistance range, yesterday it did cross that, but it did not sustain at high level. So I think we need at least a 1 day close above that 3,230 mark, which could bring in some confidence for the stock. Although mid to long term charts are not much negative, but from a momentum perspective, I would wait for a close above 3,230 for going or advising it to create any kind of long positions.
Well, avoid creating long positions on PI Industries. The next query is coming in from Manish Khedkar, and he has a query on IEX. Now, if you look at the stock, it has shaved off nearly 22% on a 6-month basis and is very close to its 52-week lows. Further downside here, Ruchit?
So a lot of underperformance has been seen since last 1 year in the stock. But frankly, if I look at some of the retracements of the previous entire uptrend which it showed, then it's trading around that 61.8% retracement of the previous uptrend. So maybe we would not see any further major correction in the stock from current levels, but one cannot rule out some time-wise correction in short to medium term. So I think if one has a good patience in the stock, one can keep a view of about at least 6 to 8 months or 12 months. Then it's these are not the levels where one should look to exit from the stock. So continue to hold on to your existing positions. I think the stock could see a bounce back over next 6 to 8 months.
Right, could see a bounce back over next 6 to 8 months. Next query is coming in on CAMS, and Naresh Obula has written in. He wants to know your views on this stock. This week it has been in a steady uptrend, up about 1.5% when it comes to the last 5 days. What would your advice be to investors on this stock?
So even here, mostly I think price-wise correction phase is over, and it seems that the stock is now gradually building up momentum. Initially, the stock took support near the 2180 mark, rallied towards 2340, and again in next correction, last few days, 2240 has been acting as a support. So it's in the process of forming a higher bottom. So that higher top, higher bottom structure, if it forms, then it can lead the stock towards 2400, 2450 mark. So I think the price-wise correction is behind us for this stock. And a gradual up move would be seen in the short to medium term towards 2400.
Right. I also want to get in your thoughts on Apollo Hospital, Ruchit. It saw a good 5% move yesterday, despite the fact that it reported an operationally weak quarter. But it was the management commentary on margins that I think has provided a fillip to this counter. Do you expect this stock to head towards 5,000 levels anytime soon?
The thing is, it was very interesting day yesterday. We witnessed a gap down opening post the results, but as I say many times that whenever we see gap ups or gap down based on the news flows, rather than gap, what happens after that gap up or gap down is more important. And yesterday after that gap down opening, we witnessed a gush of buying interest in the stock. And if you look at the volumes were quite high compared to what we see on a daily basis, on a daily average basis. So I think the stock, after correction, if it has seen a good price volume action, then the bottom seems to be done for the stock. So I think the positivity would resume in the stock, and we would see higher levels at least towards 4850 to 4900, which were the previous highs. So one should continue to hold on long positions, if any, for potential targets around 4800, 4900.
Right, positive outlook on the stock going forward. Ruchit, I also want to get in your thoughts on some of these PSU banking names like Bank of Baroda and PNB. Do you expect these counters to continue the kind of run that they had seen last year?
So if you look at last few trading sessions, then the PSU banks have still been in a corrective phase. Bank of Baroda certainly, I think, post that announcement of the results, it witnessed some up move in the stock. So relatively, if I compare both the stocks, then Bank of Baroda seems to be much better. Now, I think if we see a breakout in the bank Nifty above that 41,800, 41,850, which we were talking about, then many of the banking names would see buying interest, which would lead that bank Nifty higher. But I believe that the private sector banks could see leadership coming in rather than PSUs initially. And until we see a good momentum in the heavyweight from the PSU names such as State Bank of India, I think these counters won't be in a hurry to go up. So PNB, I think, needs a breakout above 52 marks. So till it is below 52, the structure is not much positive for the stock. Yes, Bank of Baroda relatively compared to PNB would stand out in case if there is any positive seen in PSU banks.
Right. Next query is coming in on Sequent Scientific, and Tarun Goyal has written in. He wants to know your thoughts on this stock. In fact, if you look at the stock on a 5-day basis, it has lost somewhere around 8% or so. What should one do with this counter?
So in fact, Nandita, if I look at last 6 months, the stock has corrected from that 100 highs of around 120, 125 range to about 71 now without any meaningful pullback move. And you look at the markets, you look at the mid cap index, you look at the small cap index, it has not done so badly in last 5 to 6 months. So generally, when such stocks see such huge amount of underperformance or correction in spite of the broader markets not showing any such panic, then no, I think that underperformance is bound to continue going ahead. So because of oversold, there could be some in-between pullbacks, but no, this should not be seen as a good buying opportunity. So I think unless we see a complete reversal in the stock, any kind of good volumes coming in the price up move or a high top, high bottom structure starting, it's better to stay away from this name.
Well, hope that answers your query. The next one is coming in from Funny PG, and he wants to know your thoughts on paper stocks. I think he holds some paper stocks like Andhra Paper, JK, and West Coast Paper, and he is incurring a loss of 4% on these counters. What would you advise him to do?
We can continue to hold on. Recently, we have seen some correction in the paper names, but overall the stocks are showing more of a time-wise correction. So primarily two stocks, JK Paper and West Coast Paper, the overall structure there remains quite positive. 370, 360 is a good support range for JK Paper. Some time-wise correction or consolidation could continue in the near term, but at least no, I don't expect any major crackdown in the stocks. So I have a good positive view on JK Paper and West Coast Paper till these supports are getting held up.
Right. The next query is coming in from Abhishek Agnihotri, and he wants to know your long-term view on Balaji Amines. He wants to know if he can average at current levels. If you look at the stock, it has lost somewhere around 17% in the matter of a month and is very close to its 52-week lows. Would you advise him to average at these levels?
Not really. The stock has broken its immediate supports also. So unless we see some kind of reversals coming in the stock, it's better to wait and watch. As I said, similar thing we discussed about Sequent Scientific as well. That when the broader markets are not showing any kind of panic mode or such sharp corrections in any such stocks, Sequent Scientific was one, Balaji Amines. Similarly, the stock has corrected from about at 3,900 levels to 2,100 now. So these are very corrections. These corrections are not along with the market correction, right? So these names could continue to underperform going ahead. So let there be some complete reversal. Don't try to find out any kind of bottom in the stock. It's not necessary that where the stock would bottom, your buying price should be around that. So let the structure get changed, and whenever we see such change in structure, then only look to average.
Right. Only if there's a change in structure, look to average this counter. The next query is coming in from Chandrakant Shinde, and he wants to know your thoughts on Asian Paints. The numbers weren't all that great, and the stock has been stuck in a range. What would you advise investors do with some of these paint names like Asian Paints, Pidilite, etc.?
I think one should hold on to the long positions and we know that these are some of the large cap names which have consistently given good returns over the last few years. And I know the price-wise correction has already been seen in the last 2 or 3 months in the Asian Paints. So even if I look at some a bit mid to long-term charts, then the stock has a good support around this 2,700 mark, which was the previous supports as well. So I think the downside seems to be very limited. Even we are witnessing the crude oil prices. So generally, we quite a time we see some inverse correlation with the crude oil prices. So crude oil prices are not also showing any kind of such move that we could see a good trended up move in there too. So I think the downside seems to be limited from here on. So one should continue to hold on to Asian Paints.
Continue to hold on to Asian Paints. The next query is coming in on Wipro. IT stocks have been outperforming this year after the kind of underperformance they saw last year. What would your thoughts be on some of these names like Wipro, Infosys, TCS going forward?
So overall, our IT stocks, if we see, then what Nasdaq is doing, that has a good impact on our IT names as well. So when the Nasdaq index was in a bear market during last calendar year, even our IT stocks underperformed to a great extent. And when we are witnessing a good recovery in Nasdaq from lowers of late, we are witnessing buying interest here too. So the outlook is positive, on the overall IT index. But if you look at stock-specific names, and I think Wipro has been showing a relative underperformance compared to the other peers. So I don't think that Wipro would see much correction from here levels. But in terms of outperformance, if I want to choose any of the stock compared to Wipro, then I think Tech Mahindra could stand out and that could give some better returns compared to Wipro. So if we are looking to invest in any of the IT names, then I think one should go with Tech Mahindra rather than Wipro at current levels.
Well, Satyajit Rana, I hope this answers your query. Avoid Wipro, go for Tech Mahindra if you may. The last query on the show comes in from Nidhi Kothari, and she wants to know what she should do with a stock like Sangvi Movers. Ruchit, what would you advise her to do?
So another mid-cap name, but the stock I think has a good support around current levels itself. 370, 380 is a good support range for the stock. So when the overall trend has been positive, the high top, high bottom structure has been seen. Then even if you look at the volumes, and in the recent up move, the volumes have been good. So I think the trend continues to remain positive. So continue to hold on to the stock. Just keep a revised stop losses since the stock has already rallied over last few months. As I said, 370 is the immediate short-term support. So can keep a stop loss somewhere below 365 or 364 and continue to ride the trend.
Right, hope this answers your query, Nidhi, and this wraps up our query segment for today. But before I let you go, Ruchit, leave us with some of your stock recommendations for this morning.
Yeah, so a couple of buy recommendations, Nandita, since I know I have a bullish view on the markets. The first would be in the heavyweight ICICI Bank, where we have seen a good breakout from a falling trendline resistance yesterday. So one can go long on ICICI Bank with stop loss below 855 for potential targets around 900 in the near term. And my second pick would be Balrampur Chini. Well, the stock has corrected in last 1.5 months, but if I look at the price volume action, during the uptrend when the prices were going up, we had seen good volumes, but the correction has been because of lower volumes, on the back of lower volumes. So this is a good structure. The stock is also trading around its good support. A falling wedge pattern has been seen on the daily chart for Balrampur Chini. So go long on Balrampur Chini as well, with stop loss below 359 for potential targets around 388.
Well, so buy calls on ICICI Bank and Balrampur Chini coming in from Ruchit. Well, Ruchit, with that, thanks a lot for taking out time and joining us and getting all the viewer queries addressed as well. Well, with that, it's a wrap on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.